Welcome back to another episode of Gimme Some Truth. Clint and I today are talking about an interesting topic becoming a little bit more popular in the mainstream, known as a pledged asset line or a securities loan. You may have heard about the kind of the bigger players in the world, the Elon Musk of the world using them. We're actually using them for clients, and it's working out pretty well for them.
Yeah, let's define real quick, Nate, what we're talking about here, and that is that you have a taxable investment account,
brokerage account,
yep. And you need to raise money, and a lot of the custodians would love to give you a loan, because that's how they make money too. And you can do a loan based around your securities for up to a certain percentage of your account. So, if you had all treasuries in there, you might be able to get 70%. If you have all small cap stocks, might be 40 to 50%. You could actually loan yourself. So it gives you a lot of power in being able to structure short-term financing or potentially even long-term financing, depending on rates. And we've done this numerous times for some of our clients. People usually have the options of home equity line of credit versus a pledged asset line. And I would say increasingly, with the market doing as well as it has and balances just getting larger and larger, we're looking a little bit more at these pledged asset lines as a reasonable spot to grab some cash for people that might need it short term.
Yeah, let's actually look at an example, a hypothetical, right? I think it paints a better picture of kind of how these actually work. So somebody has, and we'll just make up the numbers here, we'll make the math simple. Somebody has $1 million brokerage account. What we're saying is that the custodian that holds that account, whether it be Schwab or Fidelity or whoever it might be, likely will be willing to give you a loan on that brokerage account up to, in your point, maybe as high as 70% of the value. So in this example, maybe a $700,000 line of credit. If you own a very safe investment in your brokerage account, maybe a little bit less if you have more of a diversified portfolio. But it's a way to be able to kind of get access to those assets without having to sell the positions within the account.
Mm-hmm. And you have an interest rate on there. So it's usually SOFR, SOFR is usually what it is, and plus a spread. So you'd want to obviously ask your advisor or the custodian what that spread is, because that's what they're making money on. That spread is basically their profit and their ability to be able to advance that to you. And you're expected to make payments. It's like any other loan. So you have to make at least your interest only payments on there. And, it is kind of you have to go on margin, and there are things on there that could be bad. For example, if the market totally tanked, you might be in a margin call situation where you're really forced to sell positions inside of your portfolio. And I have a specific client example that I think is a good way to kind of paint the picture. And that is that we had a client that had a brokerage account, mm-hmm. and they have a significant amount of unrealized capital gains. So they've had the account for a long time. The account's gone up in value a lot, and they actually right now aren't working much. So a home equity line of credit may or may not be an option for them, and they'd have to go through underwriting. And instead, they got a nice pile of money sitting on the side. They're intending on working later a bit more, and they want to do, pretty, well, I shouldn't even say it's sizable. It's $100,000, $100,000 home improvement project, which now apparently is not that big.
Normal.
Things are crazy right now, but so he's got to raise that amount of money for this project, and then they want to get a loan. So they're saying, well, I could just pay it off by just selling some things, but mm-hmm. that would create a capital gain. So I don't want to create the capital gain. I don't want to necessarily try to go get a home equity line of credit. Now here's the third option that I got to present to them. And rates were very similar. So
they're very similar to a home equity line of credit.
Correct. Yeah, a fixed rate is always going to be lower, right?
Right.
Yeah. So, the fixed rate would make more sense for people that are going to pay it off over a 10-year period. And I don't know if it's a great mortgage replacement.
Right.
We had another example of, a construction loan being done.
Right.
And I think that's a great spot for that.
Yeah, I think what it does, it just gives us another arrow in the quiver. I think when we talk about, to your point, right, everything is very expensive now in terms of remodeling, when it comes to additions, when it comes to landscaping. I mean, kind of whatever it is that you're trying to do to your home or buy your next home, there's plenty of lending options out there. However, a lot of them require underwriting. A lot of them require, kind of a process that's labor intensive, right? We're not saying don't get a mortgage. We're saying there are other ways to be able to potentially put something together and potentially even combine some of these ideas, right? So maybe we use a portion of home equity with a home equity line of credit. On top of that, we might use the pledge asset line if we're needing to get to a bigger amount of money to be able to, for example, buy our next home when we don't want to have to sell our first home prior to, right? If it's a situation where we're in a construction loan situation and we need to kind of get the house built, or at least get a down payment, the first couple draws, if you will, that can be done with a pledged asset line. I think that the big advantages are they're easier than most mortgages.
Usually about like 48 hours, we can usually get approval on that.
Right. And it's not, we're not having to provide document based on employment or income or, all of those things. And the ability to, again, utilize your brokerage account without having to do it in a potential taxable way, I think is the other huge advantage.
Definitely. And we all know that contractors, if you're doing a home improvement, they want to get paid out on a schedule. There's generally a draw schedule.
Right.
So the pledged asset line gives you a lot of flexibility there of saying, okay, well, if I have cost overruns or what have you, and I have different tranches of money that I have to get access to, we can tranche that out really easily with the line. And then later on, we can fix that. So it's a definite possibility there to be able to go down that path. And then, like you said, bridge loan. I mean, I think for people with pretty large, you got to have a pretty large brokerage account, but to do a bridge loan and be able to carry two places at once without having to have all that financing done, it's a huge benefit. And then you sell your other home, you can just pay off the line if you're in that situation where you don't have a mortgage on one property, and then all of a sudden we have another property. So, it gives you a lot of flexibility in being able to go between two places as long as you can qualify for a mortgage on place number two.
Right. Right. And I think where it's getting more traction from a national standpoint is we're seeing a lot of the ultra wealthy people using pledged asset lines as a way of being able to access their assets and do it in a quote tax-free way, because we don't pay tax on pledged asset lines. I think it's important in the conversation to at least touch on that, because I think there's been some negative publicity out there about pledged asset lines and should these be taxable? There's no chatter about that in Congress right now, but I think that is the push against the reason why people are maybe, I'll even just say, potentially abusing them in that way, because they are using them to live on, whereas we're looking at them more as a bridge to get from a spot to another spot, maybe 3 or 6 months down the road.
Yeah, if you own a private company where you can't just liquidate stock easy, you could see where if somebody had a brokerage account on the side, they might choose to do this to keep themselves liquid. Again, not to sell a bunch of highly appreciated assets potentially in their brokerage account. A couple downsides of pledge asset lines too that we definitely want to talk about is if the market does go down, you can have kind of a margin call saying, hey, you got to bring that account back up to being more solvent for us to continue this loan on. So it might lead to unintended selling in that situation if the market spins down, and you might not want to sell that NVIDIA stock, but you're going to have to cover that margin call. So that's a risk.
Right.
The rates sometimes are a little higher than home equity lines of credit. Depends on the time. And, teaser rates sometimes can happen in these home equity lines of credit that are nice too. It's a variable rate. So if rates do go up, they're going to drift upward as well. So it doesn't have the fixed rate possibility that others do. Although there's, we've looked into a couple other options, and there might be one that's a little more fixed that we're looking into right now. That's
generally you can get a higher amount too than on a home equity line of credit. Home equity line of credits in a lot of cases are capped at $250, somewhere in that neighborhood. Normally, maybe not in every case, but we've done pledge asset lines into the millions.
Yeah, that's true. That's a great call. Yeah, I think that does give you a lot of flexibility there. I think one of the downsides to it too is if you're doing it for home project needs is that interest is not tax deductible like in a home equity line of credit. So you've got to be careful about what project, how long you're doing that for. Now
Yep.
you can refinance into, home equity loan or line of credit in there if you'd like to, but you've got to just be careful about the tax deductibility of that aspect.
And no closing costs.
No closing costs. Great too. And a lot of home equities there aren't, but I have seen some that do have closing
Might need
costs.
an appraisal,
Yeah.
so that can cost you some money. So, I mean, that's definitely an advantage to the pledged asset line. And it's like anything else in our world. It's not, nothing is all good and no bad. Nothing is all bad and no good. I mean, typically everything is kind of somewhere in the middle of 6 to the good, 4 to the bad, or depending on your situation. And so for us, I think it's more of just helping people be aware of the fact that this option exists, and it may give them the ability to get something done in a more efficient way, in a cheaper way, in an easier way than maybe what they had thought.
Exactly. Great time to look at it, because when the market's up so high and people have highly appreciated securities, it's a time where we have to manage those capital gains a lot more. We don't have a lot of securities that are down right now in people's portfolios. So this gives people a little bit more flexibility in larger purchases. And people are trying to stay in their homes to maintain those really low interest rate mortgages. So those projects are expensive, but in a lot of cases necessary or desirable, because a move then to go out to a 6% 30-year fixed mortgage
Right.
might not be palatable for our clients, but to add that sunroom on or something like that that's going to keep them in that home longer might be a more palatable fix, even though it's kind of expensive right now too.
Yeah, I think again, it's an awareness thing. It's just be aware that they're out there, they exist. We've used them before. The clients that we've used them for have had really, really good experiences. And so it's something that we just wanted to bring a little bit more knowledge around and shine a spotlight on it, so that people have a better understanding that their brokerage account can be a little bit more dynamic than maybe they thought in helping to be able to make a financing plan work as opposed to your traditional bank financing. So we appreciate you tuning in to another episode of Gimme Some Truth. If you want to hear more about financing and these options that are available, let us know. We can talk to you about it specifically. And until next time, thank you for tuning in to Gimme Some Truth.
Walkner Condon Financial Advisors is a registered investment advisor with the SEC. Registration with the SEC does not imply a certain level of skill or training. The opinions expressed by the participants of this podcast are their own and do not reflect the opinions of Walkner Condon Financial Advisors. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance. Thanks for listening, and for further information, please visit WalknerCondon.com.